All right. Good morning, good afternoon, good evening, and good night here from Tokyo, Japan, and the U.S. How are you doing, Mark?
I'm doing great. Thanks for having me on today.
Yeah, likewise. Thanks for coming on. And I think kind of a surprise guest for people on the show. I haven't really mentioned to my audience. Oops, I gotta mute that. I haven't really mentioned too much to my audience about our interview, which we've been scheduling here for a few weeks. But yeah, it's good to have another trader on the show. I've had some traders on the show from time to time, but I would say of a lot of the traders that I've seen around in terms of, especially in cryptocurrency, like you're definitely one of the most experienced and professional and well sought off traders that I've dealt with through Twitter. You know how Twitter's kind of a cesspool for all this different information, and so many people trying to give basically, I would say, false information, right? There's a lot of stuff to sift through. So my whole point of my channel here, just to let you know, is, basically to cut through that BS and just go straight to the point of what do we think is really happening in the crypto markets. And so just to let everybody know, Mark is awesome at that. So today we're going to go through like a normal show that we do, and then just kind of have a chill chat and pick your brain about how you do your trading and kind of some of your best practices, because I've learned a lot from you in the past, and I think that our audience can learn a lot from you as well. So thanks for the time. And just to let sorry, go ahead.
Yeah, just saying, great. I'm looking forward to it, and hopefully we can answer any questions everybody has, and be prosperous here in this rest of this market cycle.
Hell yeah. It's funny. It's like, it's almost too easy to make money in the bull market, but then at the same time, so many people losing gains right, left and right with, degenerate stuff like, trying to trade all the DeFi coins, sushi swaps, and all that stuff.
Yeah, totally. So realizing profits is our number one goal, and that's what I aim to show everybody.
Exactly. Awesome. So let's get into it. We will go through our usual segments of our show, the memes of the day, as well as then we'll look at the what's happening in the crypto market, and then we'll start picking Mark's brain. For those of you guys who, I'll mention this later in the show too, but for those of you guys who are interested in Mark's information, you can go to bitcoinsmartmoney.com. You can see it there on the screen and get more information from him there. But let's get to the memes and see what's going. So hold on just a second here. Alrighty. So got the first meme. This one, it's all right, but it's not. It's just one to kind of fill some space. But we say recalling memories with Bitcoin, right? We got our crypto peeps, the Lightning Network. Bitcoin now at 50K, so got to remember that. And our crypto winter here back in 2018, 2019 was pretty rough. So it's an okay meme, but it is what it is. Next one here. I just wanted to show the thing here with the title, which is jobs. Where we're going, we don't need jobs. So I know a lot of guys out there are trying to strike it rich with crypto. So good luck, and may the I was going to say may the force be with you, but it doesn't really jive with this movie. So you get it though. Next one. I'll zoom in on this one a little bit. So this is a list of addicts before and after. So you got your guys who are using a little of the white powder here. We got this lady here, and then after, not so good. This guy with the alcohol, also not so good. Got a little bit of crack over here. Terrible. Got your crypto trader. Oh man, wearing that hoodie, gaining some weight. Everybody's just takes the crypto toll. But next one here, we got the crypto class of 2017. This one was a la Mark. Appreciate the extra meme here, Mark, which is the crypto class of 2017 on the way down, and the crypto class of 2020 on the way up. So for those of you guys who have been in the market since 2017 or earlier, congratulations, because there's so many people who got burned during that market. It's crazy. But Mark, you've been doing Bitcoin since 2014, 2013?
Yeah, my first Bitcoin buy was in 2014, and then I started the company in 2015. So it's been a few different market cycles and a few different bear markets, and I've seen just about everything you can see in the space.
Hell yeah. Good. Next one. Hey, got to put some Doge memes in here, right? So wild Elon Musk tweet has appeared. Which way is it going to go? Bullish for the most part. Next one here. I do want to believe that Doge, can it get to $1? I hope so someday. So that's it for the memes. That's what we got. Some, okay memes. To be honest, the memes in the last bull market were like 100 times better. I don't know what's happened. Like the retail traders are just starting to come in or something. So the memes have been kind of weak in this bull market, but they're all right. So yeah, I want to move over to talk a little bit more about what's happening with the market. So I wanted to get your point of view, to be honest, on what you think is happening with this Bitcoin pump, because right now Bitcoin's at about $51,400. So it's breaking that 50,000 mark over the last few days pretty well. Taking a little bit of time to come up. And then Ethereum's at 1900. So I just kind of wanted to get some of your thoughts on that and pick your brain on how you see the market currently. And then also maybe talking a little bit about the altcoins. Then I'll kind of spin us off into our longer conversation here. But how do you want to start with that? Do you want to show your chart, or do you want to talk about the market in general? I'll kind of leave that to you for this part.
I mean, we can talk about the market in general and how we got to this price discovery. I think that's probably the
Perfect.
most important thing, because I'm a trader that believes that price reflects, all known data. And when you see price going up, what supports that move to the upside? And there's a few different things that I see supporting that move to the upside. And the first being that the Bitcoin hodlers really understand that this is a store of value, a store of wealth. And as Grayscale has grown from less than 10 billion in assets under management to, I think it's well over 30 billion now in assets under management, I think that they're a large part of the market cycle. In the Western world, in the United States, it was a little bit later to the crypto game, and I see them now really starting to pile in. And you have these companies like MicroStrategy, Tesla, Mass Mutual, buying up Bitcoin and creating a new price floor and support that no one ever thought would be possible this fast. And I always talked about Amara's law a few years back, that people always underestimate what can happen in 10 years, but overestimate what's going to happen in 2 years. And I think that now things are starting to unfold as we hit 2021, and price is just reflecting that move to the upside. So I think we're about halfway into 60% of the way through this market cycle, and I think there's a ton more upside for Bitcoin and ETH, and then a few different altcoins.
Definitely. And I think, I kind of want to get your thoughts on where we're at with 50K, because we were just talking just before the stream, like, holy shit, we're at 50K. This is awesome, right?
Really is.
It's crazy. Like, I mean, when you got into Bitcoin in 2014, right? The price, I mean, it hit 1,000 or 1,100 in 2013, but then came crashing back down, right? All the way down to, a couple hundred. But from then until now, I mean, there's basically a lot of the narratives haven't really changed. They just kind of morphed over the years. So I was kind of curious, like, from your point of view, I had kind of two questions. One, from back then in 2014, did you think this type of price action with Bitcoin in the future was even possible? And then also, from your point of view last year, right? The end of the year where we ended, I forgot what the exact price was at the end of last year, but a little bit past 20K. I think it was 24K at the end of the year. We got obviously to 30 plus in January. So I was just kind of wondering, like, do you think we would get here to this price action as fast as we did? And then also, like I mentioned with the first question, in 2014, did you even think 50K would be possible?
My first purchase was 578. It's just a number that sticks with me. I always remember my first purchase.
Yeah.
I've got a memory for numbers, and I'm blessed in that way. And I didn't really ever think it was going to move up that fast. I thought if Bitcoin went to 1,000 or 2,000, it made it. 3,000, I was grateful for. I wrote about it in an article one time. So we've definitely progressed faster than I thought. But I used to give talks in 2015 and 2016 to companies that would just ask me about cryptocurrencies, and I tried to educate them in the sense of how they work and why they're of value in the digital space. People don't realize that 92% of the M2 money supply is digital, so only 8% of cash is physical. And with digital cash being Bitcoin, it shows that this is where we're progressing as a society and as a global ecosystem. So that, that's first and foremost. But I always thought 50K was a grandiose number that we could hit, and now it's seeming like, a quarter million per Bitcoin, and another 5x from here is actually doable and possible. It's just one of those things that people think is going to now happen overnight, and this is going to be a gradual 3 steps up, 1 step back type of market cycle. As we go through this cycle, and then we'll have a plateau, and most likely a bear market cycle, which will shake out a lot of the easy money that people thought they'd make. And the key with Bitcoin is just to hold and hodl, as they say. That's the thing. Dollar cost average. Be smart. Don't be greedy. Realize profits. Some of them over time, and just try and rinse and repeat that. Don't overthink, overcomplicate it is kind of my mantra.
Yeah, definitely. Yeah, I think, and that's where people kind of get stuck in the weeds, right? They kind of just focus on, okay, the short term. Like, the way that I view it is the majority of people in the market and the majority of the people on, like, I mean, TradingView is kind of a cesspool of information as well. Like, you get every opinion and any opinion. Of course, there's good traders on there from time to time, but just so many different opinions on there. It's hard to kind of like weed through them, also with Twitter as well. So it's hard to find people out there like yourself who are really focused on the long term for crypto, because a lot of guys, I mean, we see most people in crypto, they, during a bear market, they're not out there doing their services or helping people out if that's their main business, right? They're basically like, screw crypto, I'm going somewhere else. And then as soon as the bull market comes back, which is usually like halfway through, all these guys come back just because the money is here, obviously. And I mean, I understand that to an extent, like from a trader's point of view as well, but there's so much opportunity and so much to learn during a bear market that you can actually leverage in a bull market once it gets going. I think all the people who I knew from 2017 who are really well paying attention to the last bull market, they didn't really start paying attention to this bull market until about August or so of last year. And when they came back to the market, they didn't really know what was going on, like the whole DeFi space. They looked at it like, what the hell, or excuse me, what the hell is this, right? They just saw it, the DeFi space, and they're like, I don't know what's head from tails. Sushi Swap at the time, right, made its rug pull. Like, what is that, right? And so when they come back to the market, takes them quite a while to kind of adjust, and they lose a lot of opportunity in there. So that long-term focus is really what I think is important to pay attention to. So in terms of that, like, how do you usually approach that? Do you just like continue accumulating from like every bull market? Like, you buy up to a certain point, then you just kind of hold it and stop, and then you wait for the next bear market before you accumulate? Or what's kind of your long-term strategy?
So my largest accumulations happened during the 2014 to 2016 market cycle, where we built that incredible base from 190 to 315, and from there I just really held throughout everything. During the 2017 run, took a small amount of profits, maybe 3% of holdings, but I just always believed in the long-term end game. And one of the things I did was live below my means. And my wife and I, we sold our second car back in 2014, and even today we share a car. We're both at home during COVID and living below our means and waiting for this growth cycle to happen, and to realize what the potential is of Bitcoin and cryptocurrencies. I'll probably hold 20 to 30% of my Bitcoin forever, and try to pass it down to the generations next and my kids. And I just believe in this ecosystem, how this decentralized space works, and the permissionless aspect of it. So I think it's just the most powerful monetary system we've ever seen. And that's why I'm here.
Yeah, 100%. And so you mentioned, like, during the end of the last bull market, you only sold 3% of your portfolio. You wrote it. So basically you wrote it up and then wrote it back down, essentially.
Yeah. And I wrote it down. That was my second ride down, because I bought from $600, $570, right, all the way down to 190, I think is my best purchase of all time.
Hell yeah.
I felt that I was a trader going into that. I was there for the Great Recession in 2008, where after that, silver made a run from, I think it was SLV went from 17 to 44. And that was my first large gain. And I didn't get to realize all those profits because I was, slowly growing as a trader, and I had been a blue chip investor. So I started learning when I was 21. I started just really engrossing myself in financial world and money magazine and just reading things cover to cover. And that market cycle, the Great Recession, taught me when I was working in the corporate world, hey, we need to max out our 401k, max the 6% that you get from your company, or 3%, whatever it may be. And if there is none, when things are going down is when you want to obviously add more. If you look at the S&P, 9 to 11% historically on average year over year, people just can't buy when things are red. They want to buy when it's green. And you've got to kind of understand how human psychology works, and especially trading psychology. It's kind of like one of those things you've got to do almost the opposite of what your brain tells you, and do what the numbers tell you. And that's why math and algorithms to me make the most amount of sense when looking at finance, because what is finance? It's numerics, and that's what trading is.
Yeah, definitely, definitely. I want to kind of ask you about your road, because you mentioned, right, like you're buying opportunities with Bitcoin, then also kind of how you were you alluded there a little bit to what you were doing with your early days of trading. So I want to get to that. Do want to say hi to the super chat that we got here. We got our friend Black Magic in the house saying, "Keep up the good work, bro. Appreciate you, Black Magic." Surprised you're not asking for that sell talk, but it's all good. He's a super strong hodler of the sell for the Celsius network. Let's see. We got the practical female in the house. Appreciated the conversation earlier today. So hey, what's up? Then we got, of course, Mac the Day Gamer in the house as well. Thanks there. And MLD is in the house as well. Reminding people to smash that like and get the money. Get that money. He likes to say, get that crypto dollar. It's all good. Let's throw up the banner here while we do that as well. So yeah, definitely smash the like, hit subscribe as well if you're a new subscriber, just because that helps the YouTube algorithm and helps promote our show as well. So getting into more of like your background and kind of how you got into trading, because there's a lot of guys right in our community. There's some people who have been in crypto for several years, and sometimes they come and they're saying like, hey, I'm good at getting into a cryptocurrency at a low point, but I want to improve realizing profit or stuff like that. I don't know when to get out. Then we also have other guys that come here and they're like, I'm brand new to crypto, brand new to investing in general. Where the hell do I start? And so we get them, started off on the best practices, making sure everything is, going smooth. But everybody comes up upon different, I would say similar issues as they're growing as a trader or investor. I don't really think there's a huge difference between the two. It's just time frame in terms of how long they're in the market. But I know the market likes to, really rail on traders and, try to, promote the long-term investing side, which I think, there's some nuance in between there. But just kind of, you mentioned, right, you read a lot of different articles, a lot of stuff about traditional markets. Then as you came into crypto, right, you started learning about this market. So how did you approach trading at the beginning of your career? And then kind of what did you use along the way, including maybe algorithms or your mathematical tool set or whatever to kind of get to the level that you're currently trading at?
Sure. So, early on, understanding that I wasn't a trader and even a swing trader, it was more of a buy a blue chip and hold and collect that dividend and slow growth, understanding it's a marathon, not a sprint, and just basic principles like that. And time frame, understanding you have to align your time frame with your investment preference. And being a young guy, I understood that this is, if I want to retire at 40 or 50, that's still a 20-year run. And I understand that retirement's 65 and up, but my goal is to cut that time frame down. So how did I do that? And really it goes once again to living below your means and being disciplined and smart with your money. So the future is unknowable, so you have to try and buy quality, and when you're right, you let it ride, and then when you're wrong, you need to walk away. Early on, I made mistakes where I would average down losers or go too heavy on position size and allocation incorrectly. So one of the things I understand is that traders often make the mistake of not scaling in or scaling out properly. And if you can scale out gradually and then you adjust your exposure that way, you'll realize profits and you'll maintain a position in something that's going up and making upside moves. I did sell some Bitcoin here from 26,000 to 35,000, and And for me, that's great because I realize profits that are in the thousands of percentage points. But I've also have now the position where I'm letting the rest ride, and I will continue to scale until I hit a certain threshold that I feel comfortable with, that I can take care of my family for years. I can live a lifestyle that I feel is comfortable because I've made those sacrifices. So I think people don't realize that it just comes down to sacrifice, and just because you come into crypto doesn't mean you deserve it. It's about taking the time, and I don't think people maybe have the right work ethic. So having that work ethic and trying to find confirmation bias is something that you've got to avoid, and you've got to really understand human psychology. So it's not just trading psychology, it's really human psychology, and then deriving, after you understand that's how we think as humans, then you've got to figure out how to translate that into what works best for your trading portfolio and your acquisition of these assets. So I think that's the best thing. And maintaining, I think the last thing I'd say is maintaining Bitcoin as your primary holding is the key. And most people don't think of it like this, but I always tell new people, when you invest in the stock market and you're buying, say, Apple stock or Amazon stock, what are you using? You're using dollars to buy that. And then when you sell that stock, you're going back into dollars. With crypto, Bitcoin is our reserve currency. So it should be your largest holding. And when you buy altcoin, you've got to understand that altcoin is going to flow back into Bitcoin. If you look at 90% of these charts on the weekly time frame, you'll see that most are down 60 to 95% against Bitcoin. A saying in crypto we say is up in USD, down in BTC, and that just doesn't work. That's not the smart way of doing it. So you've got to flow back into Bitcoin and maintain that as your primary holding. And I think all too often that the new entrants do it the exact opposite, where they hold 80% altcoins or 90% altcoins and then 10 or 20% BTC.
Yeah, definitely.
The biggest part.
And when, looking at the crypto to crypto charts, like Bitcoin to like Ethereum, for example, or Ethereum to whatever altcoin that you're looking at, in general, like for yourself, like, did it take a while to get used to looking at those types of comparisons? Because it's kind of like, for a lot of people, I think that when they're new to crypto or when they're starting to get into crypto, it's kind of like coming into a foreign country, right? Like if you're like, I'm in Japan, I'm in Tokyo. So like when I get people visiting me here, they're like, what's this? What's a 10,000 yen versus, like a 500 yen? Like, what are these coins and everything? It takes people, some time to figure out what, the currency is. And it's the same thing with cryptocurrency. They come in and they're like, okay, I see all these things are going up versus dollars. So there's so many opportunities in the market. Takes a while for me to kind of drum into people's minds that, yeah, like you just said there, that crypto to crypto, the Bitcoin 2x chart is really what you want to look at. Is it outpacing Bitcoin or is it outpacing Ethereum? If it is not, why are you paying attention to it? Because you could be in 1,000 different cryptocurrencies, but what's the point of being in 1,000 different cryptocurrencies if, you're not outpacing Bitcoin and Ethereum, or even if you're just matching them? You might only want to get into altcoins that have the chance to outpace, right? So like for you, when you started looking at those, was it hard for you to find the patterns that you usually look for compared to like a USD chart, since more people are trading on the USD chart? Or do you find the psychology of people that are trading crypto to crypto is something that was easy for you to kind of grasp?
That's a good question. I think no matter what, whether it's the USD or BTC, people make the same mistakes over and over again. It's just how we are. We tend to think this time it's different, but it's not. And I think one of the things that I got lucky with it, and making money does require some luck, but it also requires recognizing, that luck and understanding where you came from. And with Bitcoin, I was so engrossed in understanding it that's all I did for the first 2 years. So I studied, how it works. I read every Andreas book. I watched every YouTube, every documentary I could get my hands on. And so I studied that the whole time. And I remember watching Ripple make its initial move and just like blow up. And I didn't really grasp altcoins yet. And I'm really fortunate that I didn't, because I probably would have made the mistake of going 80% alts and 20% BTC, and then, seeing those losses, and then, as it goes down, then you sell, and then you watch it go back up, and it messes with you mentally. So the fact that I was able to understand Bitcoin, I recommend that everybody required reading is, Satoshi's white paper. The book of Satoshi is great. Andreas's introductory stuff to Bitcoin is should all be required. But people, once again, they just don't put that time in. So they see that the fast money potential, and then the mistakes get made. But I think that understanding the big picture is the most important thing, and the on-ramp is Bitcoin, so we should understand how that monetary system works. And trading some altcoins can be fruitful, but you've got to be a disciplined trader and understand that realizing profits is the name of the game. And if it's 5% ROI gain on Bitcoin, to me that's amazing. A lot of people talk about 10x, 50x, 100x, and those are like really small chances of that happening, 1% of the time or less. And to just try and go for those, that should be maybe 1% of your trading portfolio if you're gonna try to find that diamond in the rough. And I remember seeing Ethereum ICO at $3 and then go to 78 cents, 80 cents. And I bought some Ethereum. I remember I used to use Shapeshift, and you could get one Bitcoin traded and get about 650 ETH, and it was crazy back then. I remember selling Ethereum $6.25, 650 after making that move from $1, and thinking I was a trading god, and then watching it go up back to 11, and now here we are at almost 2,000. So it's one of those things that you've got to not overanalyze the trade and not look back. You've got to understand there's new opportunities, and how did you do? Because you can't get that toothpaste back in the paste when it comes out. So I think that's the most important thing, is just to do what you do well over and over again, and then just continue to execute and be disciplined in that process, and you'll do well over time. But when you change things up and try to make a peanut butter jelly overcomplicated, it's going to come out crappy. It's a basic sandwich, and that's how you need to do investing. Just keep it basic, and then practice good habits. And Trading in the Zone by Mark Dukas is probably one of the most influential books for me that I've ever read. And I've read it a handful of times, and I've done the audiobook maybe 10 times. And it's just one of those things I'll do once a year just to keep me grounded.
Yeah, it's a very good book on mindset, right?
It really is. To me, it's the #1 book on mindset and trading psychology that's ever been written.
Yeah, and I'll go ahead and do a short self-shill here just based on that part of the subject. So for those guys, speaking of mindset, no, I'm joking. So we do got the Crypto Mindset course coming out. If you guys want to get on the short list for the Crypto Mindset course, be sure to come over, as you guys who have been watching the channel know, come over to cryptomindsetcourse.com, put your best email over here, and you'll be ready to go on the course. We have the course coming out on March 5th. For those of you guys who aren't aware, and it's only going to be available for 5 days. So you can come over here to cryptomindsetcourse.com, right? Put in your best email, and then you'll be on the list. We currently have a lot of people signing up, so make sure that you get on here. So like I said, it'll only be available for 5 days from March 5th to March 9th. So once that's closed, basically, sayonara, no problem. We only got people who are serious about making money and maximizing their Q2 through the Crypto Mindset course in there. So get in there, or lose out and making as much money as you can in the next in the next quarter. So that's what we got there. Let me just throw that quickly into the chat here. Tom, I love it. Tom says, Chad's only in the Crypto Mindset course, right? Crypto Chad's only. If you're somebody who, I think, what you were saying there about, the being able to be in the market for a long time and, have that discipline, have that patience to learn what you need to do for trading is something that I think just most people don't have the stomach for, right? Because in the course, right, we've gone through a lot of trading principles, and I think the majority of people will say, like, I can getting kind of like chart literate for most people who are in the crypto market is at least kind of like the minimum level that's necessary, in my opinion, to kind of be competent in this market. You don't have to be able to like make a chart necessarily and do all the day trading principles, but if you're going to be in the market, you better understand how the ebbs and flow of the price works. So at least getting to that level, but sometimes getting people to have the patience and discipline to get there. It's kind of like learning a language, right? Taking about 15-20 minutes a day on the regular, spaced repetition, learning this for 6 to 9 months. once you can do that, right, then you can gain the skills that Mark is talking about here. But I think there's different statistics, like something like 80% or 90% of people who trade don't do well, right? And I think that's not because people don't have the ability to learn it or the ability to do it. I think that's mostly just most people don't have the discipline.
So I fully agree there, Charlie. I fully agree.
Yeah, so it's good to see somebody who's disciplined as well. It's still in the market from 2014. So next thing is we have a few people in the chat asking questions specifically to you. First and foremost, we got Lawrence, maybe who's new to the channel. Be sure to hit the subscribe button. Lawrence, he says, who is Andreas? Andreas Antonopoulos, OG crypto guy. We talk about him on the channel a lot, and definitely one of the guys who's required reading or required watching as well, as Mark was saying there. Let's see. And Hancho knows what's up. He says, look for the book, The Internet of Money. Good stuff. But we have another one. Hancho says, Bitcoin smart money, meaning Mark. I heard people use, I think he meant Ethereum instead of Bitcoin as their base, where they have the most, I think, holding the most in Ethereum. And when they trade, they try to get more Ethereum out of it. What do you think of that? Is Ethereum too risky?
That's a good question. And the reason why Ethereum is a sexy investment is because its market cap is much less than Bitcoin. So it has the potential to 2x, 3x, 4x faster than Bitcoin. But if once again, you look at the ETH BTC chart on a weekly basis, it's down over time versus its all-time high and versus Bitcoin's all-time high. Now, is ETH a good investment to have? For sure. If you're going to have a split, 70%, 75% BTC, 20% ETH is perfectly fine. And for someone like me, I traded Ethereum over the past few months, and now I've kept a 30% core position in Ethereum, stuck it on a hardware wallet, cold storage, and I'll let that run. And also, there's different onboarding and here in the United States for different investment trusts that Grayscale puts off, and the ETH investment trust and GBTC are two that give you access without having to use your Bitcoin. But one of the things is just maintaining Bitcoin as that reserve. ETH as a platform and ecosystem is growing tremendously, but it does have a ton of competition from other coins. Where to me, Bitcoin doesn't have that competition. Polkadot, Cardano, Neo, all these different coins and tokens are gunning for Ethereum, and that's fine. ETH 2.0 looks to solve a lot of the headaches that are currently going on in the Ethereum platform, but I do believe it has a position in a long-term portfolio.
Yeah, definitely. And so for you being majority, let's say Bitcoin, somebody coming in newer to the market right now, like, would you still be like, yep, go majority Bitcoin? And then like, if so, then comparatively, like, what would you say? I mean, you don't need to say like on the spot, like exactly what your portfolio allocation to somebody would be, but, just generally speaking, like, how much would somebody want towards Bitcoin, towards Ethereum, and then maybe towards some speculative plays as well in this market?
Yeah, so I think one thing that people make the mistake of is thinking it's a one-size-fits-all approach for your portfolio allocation, and it's just not. I'm a different age than so-and-so, and they're a different age than me. They have a different income class. They have a different family. They're where they live, it's different. So you've got to understand it. You've got to customize it for yourself, and having Bitcoin as the mainstay is good. And being new to the space, the reason why you wouldn't go all in on alts is unless you're a top 1% trader, it's not going to be a good long-term proposition for you. If you're an excellent trader and you know that you can capitalize on you and you have an edge, then yeah, I could see maybe lessening up the percentage points I give you. But the majority of people that we're going to encounter are not top-notch 1% traders, and that's okay because trading is extremely difficult. So what's the smart and fruitful thing over time? And it's Bitcoin, ETH, of course, and then maybe one or two alts like BNB or Cosmos, and a couple of these majors. But putting anything more than 1 to 3% into something that's not in the top 100 to me is not a long-term winning proposition. And we want to favor what statistics tell us and what the numbers show, and that's what the numbers show, whether you like to hear it or not. Bitcoin at 50K today, we could easily see a 2x in Bitcoin brings it to 100,000 per coin. And now you're pricing out just about 99% of the world to ever own one full Bitcoin, where that was easily attainable 5 years ago. And that's fine if we're at a different time now. Maybe owning 0.1 Bitcoin is going to be the new one Bitcoin.
Yeah, 100%. Yeah, I think coming soon, very, very soon, in my opinion. And I think, we could talk a little bit about the charts and what we think is going to happen with the price of Bitcoin here, and, have a little fun speculating, obviously, and then talking a little bit about maybe long-term goals that people in this decade should have for crypto, and maybe how that's going to change over the next few years. But yeah, I agree 100% having that. We've talked on this channel since 2019, since February 2019, since the early part of the bull market. We've said, yeah, every man should have one Bitcoin if, well, we just said that. Now we're saying if possible, because it's very hard for a lot of people to attain that right now.
Definitely. And looking at the space right now, you've got altcoins moving today, but the one thing to take note of is that BTC dominance chart. It could be forming a head and shoulders bottom. The right shoulder is kind of being decided here in the coming days and weeks. And if this head and shoulders bottom plays out on the BTC dominance chart, you're going to see altcoins bleed again tremendously. And yes, they've done well, but how many people have actually taken profits along the way here? And it comes down to greed. And a lot of people think that it's just going to go on forever and grow against BTC, but it doesn't. It hits a resistance point. It hits a topping out point, and those things can be seen through the chart. When you see volume dropping as things move up, that buying pressure is getting exhausted. And when you see divergence with an indicator as price moves up, that is becoming an overheated trade. Well, I mean, maybe we know it, but they don't know it at the time. And then we see it after the fact, and then hindsight trading comes into play, and then the mental anguish and the monkey mind and beating yourself up. There's just so much that goes along with this. That the highs are high, but the lows are low as well. And that's why keeping an even keel and keeping it simple, stupid, is the mantra.
100%. And that's one thing that, in the last couple of courses that we've done for Q4 of last year and Q1 of this year, obviously we focused heavily on offensive strategies, and we focused a little bit, on end of bull market scenarios and a few defensive strategies, but we're going to be going heavier in this next quarter into defensive strategies. Because like you said, right, as the market gets more heated, more people want to get into altcoins, and then you're going to have to learn how to realize profits, and then also how to play defense, because defense wins championships. So we'll talk about that maybe a little bit more here in a second, but looks like we have some other people in the chat as well. Let me see. Looks like somebody who's been following you for a while. Let me kind of come back here and see if I can find that one. Where was that? I wanted to find that one because I saw it come up, but here we go. Christian Corwan is in the chat. Appreciate you. Hit subscribe if you're new to the channel. He says, I know Mark for over a year now, and honestly, he's one of the most serious trader and consultants for crypto that I've met in years. Awesome. Appreciate you, Christian, and appreciate the love there. Let's see here. So yeah, let's talk about what you see going on in the market currently, and kind of how you can see that coming. We'll take a few more questions and stuff from the audience a little bit later, but I do want to kind of take a look at your charts and see what you think, may happen. Of course, like we say, we're not trying to predict all these things. It's all probability. There's different possibilities as well. There's multiple scenarios that we can see here in the coming months and the coming years, but want to kind of get both your macro view of this bull market, and then kind of what you see in the next couple of months as well. So let me know once you're ready, and I'll share the screen.
Sure. Yeah, I'm ready.
Okay, perfect.
I've got the Bitcoin chart pulled up. One thing that I look at in crypto is the 8-hour chart, and the reason why is you get three charts in a day, 3 bars in a day. And the reason why I find it important is, say that with the traditional stock market, you look at the daily chart, you only have 5 bars in a week, and it's closed on the weekend. So with crypto being 24/7, 365, I feel like drilling down and seeing a little bit more of the price action gives you more of that edge. Now, looking at things on lower time frames, I think is the biggest problem for people, because they try to find that bottom or that top. And what ends up happening is you get more false signals. And so with Bitcoin here, we've been long on the smart money algo, which is a indicator that I've been using with my family now for a number of years. And my father is a technician, and I learned a lot of these habits through him over the years as I came up, as a teen and young adult. And what I see here with Bitcoin is it going long here during this month of September. You can see that 10,000 base being built. But one of the keys that I always tell clients is look for the confluence of the moving averages when they move together and then price goes above it. And when you have that, it's more of a confirmation. So here's that first time breakout in October, really getting confirmed long on the 8 hour here at about 11,000 if we call it a round number. And then you see here the 20 period moving average, the 50 and the 200 all line up in order. And what we call a bullish phase is when the 50 is above the 200 and price is above both. And so when it entered the bullish phase, the rest is history. You can see here volume to the upside, more volume than selling pressure. And then obviously that subsequent run up here to 50K, it's been long on the 8 hour ever since. And it rides that 20 period. The shakeouts happen to the 50, and then from there they get bought back. And the way you can see that is through the wicks. So these are all bullish wicks telling you that price isn't willing to go below a certain level. And when you see that, it tells you that the continuation will happen. And even here today and over the past few days, it rides the 20 period moving average. And today you had a little fake out down to 50,800, 50,500, and then boom, it's getting bought back up as New York City and Wall Street wakes up. You're going to see GBTC and ETHE again move to the upside, especially ETHE. I bought some more yesterday as I thought that it was lagging behind. Did I sell some of my ETH BTC? Yes, because I realized profits, one of the things that we talk about being one of the most important things to do. But I had some of that dirty fiat, so I thought that buying some ETHE was the way to go, as that was a lagging chart. And I'll pull it up here for everyone to see. And,
I'll let you go through that. I have a couple quick questions after you get done with that about what you think about Grayscale trust prices compared to Bitcoin, because it's something that I've noticed that I want to kind of speak about with you on that. But I'll wait until after you're done with this.
Cool. I'll just touch on this for a minute here. And
of course, take your time.
It was a kind of a cup and handle pattern, but I like to look at equities and stocks and ETFs on the 130. So this is like the 8 hour chart, but for traditional markets. And this long comes through on November 10th. It confirms on November 11th at a price of $7.20. You've got the move from 7 to 24, and then you've got the 40 to 50% retracement, which is completely normal, provides that buying opportunity, shakes out a lot of people. And then from there, it continues to the upside. But this trend remained long. And one of the ways you see that is through the slope of the moving averages. And for me, the 200 period moving average is the most important thing to look at for a trend continuation. And if it's upward slope, all pullbacks really are just pullbacks and uptrends. So with ETH, I saw that it was lagging. The ETH USD chart, everybody wanted it to go to 2,000 once it hit 1,500, and they thought it was going to happen within a week. But what happens is it shakes out people. You've got liquidations on leverage longs and margin trading that a lot of people don't think about. But what has to happen is these market makers come through, and then you'll see the volatility, the spikes in hourly and day-to-day price action. But what you've got to do is really not leverage trade and never do more than 2x, because think about it, if you do more than 2x, you have a chance of getting liquidated at a much higher rate. And if you do 2x, you won't be liquidated.
Oh, there you go. Sorry. Can you repeat that one more time? I think you froze up there for a second.
Yeah, no problem. So what I was saying was with leverage trading, it's really important not to do more than a 2x trade. And because if you do more than 2x, then you'll have a higher chance of being liquidated. And with this chart, the reason why I looked at it is due to that cup and handle, then the upward sloping moving averages, and then the 130 being long, which is similar to the 8-hour and alt ratio pairs. So that was the reason why I bought a little bit more of this yesterday, and I think we're going to open up to the upside, probably hit 21 today, and I'm targeting really 26, 27 for this here in the short term. So I think that's viable. And what I was saying earlier was that people thought that the ETH USD chart was going to hit 2,000 much faster than it did, but what it required was that sideways movement after hitting 15, 1600, and ETH's continually made all-time highs now since February, and since hitting it in February and late January. So I think that this upside happens. You've got DeFi protocol being, a lot of them being built on top of the ETH ecosystem. So I think there's a lot of potential here with ETH, but I still echo my major sentiment of having BTC as your primary holding, because it's something that you can hold for the long term and not have to worry about the setbacks. I don't think we'll ever see an 80% drawdown in the Bitcoin chart again. Are 20 to 30% drawdowns going to happen? 40%? Yes, it is going to happen. But those are the times when you need to use your fiat and your USD or your euros, yen, yuan, whatever you have, because the inflation that's happening within these currencies worldwide, it's completely different than Bitcoin being a deflationary asset. That this is a once in a lifetime opportunity. To where we're all investors and traders now here in something that was created 10 years ago, and that's going to be issuing coins until the year 2140. So we've just got to have that major long-term mindset and realize this marathon aspect of investing.
Yeah, definitely. And I mean, there's a million questions I want to ask you just on some of the stuff that you said there, and then also what the data that you're showing here on the chart. Let me see here. I was just looking at the chat, and there's a couple questions. We'll get to you, James, here in a second. And then also, I think we do have, we have our group is called the Moon Gang. We have a lot of guys who, looking to go to the moon, looking to make substantial profits. Some people are here for the short term, some people for the long term. I do, just to kind of let everybody know in the chat, because we do have some degens, of course, as usual in the chat. I think, we have some jokers in the channel, of course, as usual, which is got Mark saying, we degenerates don't do less than 10x leverage. 2x is beta, but no, I think it's really, really important to actually like Mark is like an experienced trader here who's like made gains backwards and forwards in a bear market, bull market, all these things with crypto. So I do think we have fun on this channel with a lot of the stuff that's happening in crypto, but it is sometimes good to have like a more serious discussion on trading because it's extremely difficult. And so having these discussions is fun for me. And, sometimes these types of discussions aren't the most sexy. They're not the most interesting, but being real about it and looking at what is the best way to preserve your capital and to make money in the bull market while not doing anything absolutely crazy is important. Of course, we do like to have a few trades here and there that are, like a little bit out there, but yeah, as long as they're not the majority of our portfolio, right, that's not going to hurt us. So just kind of having a little fun there. But one thing I wanted to ask you about the Ethereum Grayscale trade that you're talking about there was with Ethereum Grayscale, like the ETH Trust versus, let's say, regular Ethereum. Obviously, there's a markup, right, in terms of the price or the percentage with the ETH. So there's a couple questions I have with that. One, in terms of are you trading that mainly just because it's convenient to do so in terms of you don't really have to custody the asset, or what's your purpose when you're looking at ETH versus regular Ethereum?
Sure. So due to the fact that I worked in the corporate world for 12 years, was able to develop a 401k. And when I left corporate America, I rolled that over into a traditional IRA, and I moved it into cash and slowly started buying the S&P 500 ETF, VOO. But I knew that I didn't want that to be, 100% of my allocation. And I always believe holding, anywhere from 10 to 20% of your cash, whether it's in a bull market or a bear market, you've got to have some of your retirement account in a cash allocation so you can buy things during a bear market. So when I did that rollover, I went to majority of cash, and I was really patient. And and got, lucky in some sense that we had the Black Swan event in March. So I was sitting on a lot of cash. And when I saw the S&P and the Dow Jones dropping, 3,000 points a couple different times, I knew that was a really good buying opportunity due to the historic trend of the S&P and the Dow, gaining on average 9 to 11% a year, and having that happen. But so with that mindset, I and the free cash flow in the account, I saw the vehicle of ETH and GBTC of value, even though you're paying a tremendous amount of fees. If this volatility in ETH moves to the upside, and Bitcoin, that the fees they're negligible at this point because of that upside move. And look, ETH goes from 7 to 21 today. That's a 3x just from the long. A 3x you're not going to get anywhere else. You're not going to get that in the S&P index. You might find that through a Tesla, but however, Tesla at 3xing at this point is going to take a lot longer than this chart, the ETH chart that we put earlier, happening within a quarter. So quarters. So that's really the reason why. I'm not sure I'd say hold ETHE or GBTC super long term if you're buying it at these prices. You can hold them during the bull market, but as that bull market rolls over at one point or plateaus, maybe it's time to realize some profits, or look for safer plays and not have such strong exposure to the volatility. But once again, it's super dependent on what your age is, what your outstanding cash flow is, what your lifestyle is, family situation. All those things go into it. It's not a robo approach, and that's not how I do things. And that's my recommendation for being smart.
Exactly, 100%. And I just wanted to go back and make sure we get some of these super chats answered. I mean, that's a very good explanation there. To be honest, all these things that you're talking about, like I could go off on tangents for like hours on a lot of this stuff. Like we just, there's never enough time to pick the brains of fellow traders when we're talking about this type of stuff for sure. But of course, as we go up on this subject, like yeah, we can't have a cookie cutter solution for everybody. We have James T in the house saying, hi guys, with the $4.99 super chat, says, hi guys, thinking about rebalancing my portfolio into Bitcoin. Before the bull, it was 65% of my portfolio. Now it's 35%. Do you have a recommendation on the percentage? And in terms of what Mark is saying here, right, it's probably best to have a discussion about that for your specific situation, because we'd have to ask a lot of questions about your portfolio besides this portion here. So through a consultation would probably be the best way to discuss that. But just in general, Mark, do you have any information or any thoughts on this, or just like?
Yeah, definitely. I mean, it's hard to know with, your 35%, it's hard to know what the other 65% is. I mean, if you're holding BNB, I mean, heck, that 65% is crushing. And, yep. BNB had over the past 4 weeks, they had 10 million new users sign up for the platform. So, and then when you think about comparing BNB to ETH and the Binance Smart Chain, this is probably going to be a $300-400 token. And, that's why you've got this extreme move to the upside. And this has, a ton of different potential on it due to that growth. Is it going to top out at some point? Yeah, it is going to. And BNB is a really strong coin. And I could see this, top 3-4 coin during this market cycle. And if you look at this move, it's outperforming those. But, when it made that move for, in April 2019 from, 47,718 sats down to 10,000 sats, that's a big drawdown. So it's also made a move from now 10,000 from the beginning of the year to just under 40,000 satoshi. So it's got a 4x in it already. But it depends what that 65% of your holdings is. I don't know, because it could be micro caps or mid caps, and have they outperformed of recent, or are they on the downtrend now that BTC's made that move from 35 to 52?
Definitely. And then also, I mean, I think it depends on his purpose as well, like what his goals are and what he's trying to get out of this bull market in terms of trying to, right now, if you're already situated in that situation, and if your Bitcoin average price is extremely low, it's like, okay, if you're looking for what's your timeline as well, if you're looking for the next few months, then obviously, changing your Bitcoin position might not be the best situation, but in terms of your average price. But if you, let's say, you have that long-term look, then yeah, averaging in a bit higher prices is not terrible. We had a few other super chats as well. I want to get to them a little bit later because they're a little bit different on the subject. But let's talk a little bit more about your looking at the market here. So in terms of, I guess, one question I just wanted to ask, which I think might be interesting for some of the people who are traders in the chat, is looking at your moving averages. So I get this question a lot, to be honest, which sometimes I'm just like, it's what I do, right? And there's not necessarily, there's different patterns that we see, and some people like different moving averages, different EMAs, simple moving averages, all that jazz. Is there any specific reason why you've chosen the numbers for the moving averages that you have, and what purposes do you use them for?
So, there's no right answer on which moving averages to use. For me,
yep.
I use, let's see, I'll show you the dominant chart I use, and it's really the 20 period, the 50, and the 200. And the 50 and the 200 are just kind of like the staples of traditional stock markets. So I'm used to that. And the reason why I have the 20 now is the 20 provides really good re-entries during bull markets. So when things pull down to the 20, and let me pull it up on the 480, when things go to the 20 period moving average, in a bull trend, those are excellent rebuying opportunities. You don't need an indicator. You need a guru telling you and paying thousands of dollars to, you practice this habit over and over again, you'll be fruitful. And moving averages just display when a trend is happening. And the key to take note of for the moving averages is the slope of them. I think that's the most important thing traders fail to realize is looking at the slope of, say the 200, which really provides that ultimate, guidance, and then understanding that nothing good happens below the 200 moving average. So when your stock, your coin is trading below its 200 period moving average, and especially on the daily, nothing good happens below the 200 period moving average. That's kind of my philosophy with that.
100%. Yeah, I agree 100%. And yeah, I think those are the things like, you get some people sometimes they kind of spurg out on different numbers, or like they think like, oh, this moving average is definitely the best one to have versus this one. I'm just like, I agree with you 100%. It's not necessarily, there's not like one size fits all, but there is a rhyme and a reason for what you're looking at there.
Real quick on the moving averages, the one thing to not do is to change it up constantly. When you pick your edge, you got to stick with it. You start throwing the EMA 8 in there, the EMA 30, the SMA 10, then you're going to get super confused and you're going to make mistakes. Once you pick your system and there's an edge there, you got to stick with it, because you're going to be wrong a handful of times, but once you have that system and that edge, if you do the same thing over and over again, that repetition, it's like going to the gym. When you go to the gym and you lift weights, you don't perform the exercise of bench press differently every time. You do it, you learn it properly, and then you execute that day in and day again. And that's when you go from 135 pounds to 225 to 315. And that's the way you grow. And then the last thing I'd say with moving averages is when they all confluence together and price starts to trade above them and you've got a slight slope to the upside, I mean, those are layup trades a lot of times. It's hard to make that execution for traders because if it doesn't go right in their favor the first day, they start to panic and then they start going away and deviating from their system. So
100%. Yeah, a lot of people, right? They kind of go willy-nilly. They don't necessarily have a strategy. They'll go into a trade and then they'll be like, I'm in profit. What should I do now? Or they get in there and they're like, I have no idea what I'm holding in this coin. Why am I holding it? Right. So both on the fundamentals and the technicals, they're just like lost in the sea of like, what do I do now? Which is probably the worst position that you can be in. So 100% just create a strategy, make sure you have a plan, make sure you have a goal in mind. And it's those things that, to me, I kind of laugh at it because I think, it's pretty simple and it's something that everybody should have in mind. But when you talk to the majority of people, especially the people who are coming new into the market, which now we have a lot of retail traders coming new into the market, they don't do that, right? They just go right in, and that's where a lot of the blood happens. So 100% agree with you on that. And Zotrack in the house, agreeing with Mark here. He also says, I don't see how anyone could disagree with Mark. Just plain lucid common sense. Love the show. Appreciate you, Zotrack. Good stuff. So the other things I wanted to kind of get your take on, because we have a couple guys talking about this as well. So we'll answer these super chats and then we'll get into some other discussion on the charts here. Which is Arnold M says with the $5 super chat. Do you guys keep any of your money in BlockFi or any other place, where you can earn interest? For me, I don't have any in BlockFi. I do Celsius network application for earning interest or trying to earn yield personally, right? There's different reasons for that. We discussed that in the course. We've discussed that on this channel too. If you guys want to learn about Celsius in more depth, we've had, of course, several shows, but probably the one for anybody like yourself, Arnold, who may be newer to learning about Celsius. Go back and check the video we did with Zach from, I think it was like last July. You can find that in the history that we have here on the channel. Really good. He's one of the marketing leads for Celsius from their company. How about you, Mark? Do you use any interest-bearing or yield-bearing platforms?
I don't. I'm probably that old school thought of not your keys, not your coins.
Yep.
So that's probably the most important thing. Doing a little bit of it, I could support, but I don't really recommend stuff that I don't do personally, and I'm also not versed enough on BlockFi and Celsius. So it's not something I recommend. But if you research it and it makes sense to you, I could support it. And BlockFi has been around for a while, and I haven't heard anything bad about BlockFi. So it could make sense, if the risk to reward and the interest they pay out makes sense to you.
Good. Yeah, I think so. And yeah, I agree with you, right? Generally, not your keys, not your coins. One thing that I noticed in this bull market specifically is, right, we have kind of a different level of people who are coming into the market in terms of a different level of, what do you call it? When we think sentiment is too high, essentially in the last bull market, right? When the people at the water cooler were talking Bitcoin, when companies like Tesla were starting to buy Bitcoin, we're like, okay, sign at the top. Too many people, too much exposure, too many people coming into this market. Now I think that's normal. I think the top of the bull market is when you start seeing potential things like governments, large corporations, and more of like a geopolitical event happening towards the end of this bull market. I think a lot more has to happen yet before we get to that point. But I agree that not your keys, not your coins. But the reason why I mentioned that, I was kind of going off on a tangent there, but I just regained my train of thought, which was a lot of people who are new to the market essentially want to, they don't want custody, right? And so a lot of people who are newer to the market, you talk to the normal average Joe on the street and you'll be like, do you want to be your own bank? Do you want self-sovereignty? I think a lot of people would say, I can't handle that. So it's not, Bitcoin and stuff like that to get to the level that the masses can use it. We do need things that are kind of a bridge between that traditional system and the current system. So it is definitely something that I think if you've been in Bitcoin a while, it's pretty much against that self-sovereignty stuff that we definitely want people to go towards. But there is some use for some of these newer systems as well. Black Magic has another question with the $5 super chat. Says Celsius assets under management growing fast, and so is the number of active users, but the price is not moving. What's that about? Let's take a look at it two angles. So we'll take a look at it from a technical angle with what we got here from Mark's chart, and then maybe we'll talk a little bit about the fundamentals as well. But when you look at the chart of Celsius to Bitcoin, just in general, Mark, what's some of the first thoughts that you have?
First thought I have, and I noticed recent trend, but I was just like, let me look at where it's been. It made a 500% move from, August to the end of the year. So 5x, coming back down in 50% retracement is perfectly normal. You've still got an upward sloping moving average on the daily. It's also doesn't look like it has that many on ramps, so that is not helpful. But volume decreased to the downside after making such a move up. You've got that pullback. It's still kind of in an accumulation range here. Support is at 10,150 sats. So holding that's going to be key. It is potentially, going short, but it's just one of those things you got to keep your eyes on and drill down and see what's going on. On the 8-hour, it does display a potential trend change to the downside here. So this also could be because Bitcoin's move up. People are selling this 5x into BTC, and you've got to see, is it going to hold that 10,150 support? I mean, you're coming into this week probably making up that decision, and if it closes below that, you'll see another move down into the 7/8. It's going to go down into the 7/8 and maybe build support. But one thing to take note of is that volume is shrinking on the downside move, and you still have a decent slope to your 200 period moving average. So that you got to look at both sides of this trade. That's why you can't go all in on something, or when you risk 1 to 3% on a trade, that allows you that flexibility to be wrong. But when you're wrong and you use 30% of your stash, it hurts. It takes months, years to come back from those mistakes.
Definitely. And we'll mainly focus on the technical aspect here. And in terms of, because we were talking about trading psychology and psychology of markets and stuff in general. We tend to get a lot of groupthink and a lot of people, right, kind of getting in their tribalism within the market. You see that on Twitter, like absolutely like mad, right? People being like, Ripple's the best coin that ever existed. Celsius is the best coin that ever existed. XYZ coin is the next best thing since sliced bread. Like, how do you view that? And then how do you see that kind of influencing charts or not influencing the market as well? Kind of how do you read that information when you start seeing people talk about that in the market?
Yeah, I think people make financial decisions, using Twitter, and to me that's great.
Yep.
I think doing your own due diligence is very important in understanding the fundamentals of a company and an ecosystem. And then from there, if you're going to make those financial decisions from, an anonymous figure on Twitter, you've got to not over allocate. I think that people try and make too much in the short term, and they over allocate into these junk coins, and it's hurtful. I mean, I was looking at the EOS chart the other day, and it's down, 90% from its all-time high against BTC, and that's just a lot to overcome. And in EOS is an ecosystem that they hold a ton of Bitcoin, once again, and so showing you that the on-ramp potential. But it just comes down to that trading psychology, being smart about position sizing, and not over allocating yourself. I think that's probably the most important thing.
Definitely. And I think we have a few other people in the chat. Hold on a second here. Good. I just wanted to kind of see a couple other things in terms of like Bitcoin, or sorry, this is the one I was looking for. Stevie in the chat here says, I'm totally new to the crypto world in the past 3 weeks or so, but I love your simple, straight talking sense with none of the ego dominated characters that speak at 200 miles an hour. Really appreciate it. Yeah, it's like, it's hard to find some rational people in crypto, isn't it? On YouTube and Twitter. There's just so many people going for the clickbait. So appreciate that, Stevie. And that's why I'm bringing Mark on today, right? The BitcoinSmartMoney.com is his website. Go over there. He's also on Twitter. The Twitter handle is at BTC Smart Money. I'll throw that in the chat as well. So definitely go and follow what Mark is doing. I know like your platform, right? You're not a huge social media guy, but when you do give out information, I think people should absolutely listen. There's so many people who, right, like you said, they get stuck on the short term, and they really just, they can't see, they can't see where they're going in the market because they have basically what I call horse blinders, right? They just basically focus so much on what their narrative is or what they're thinking, and they don't really take the time to like you said, kind of zoom out, see what's actually going on, and really look at the market with a rational mind. There's so many people that I think get irrational in this market, and we're starting to see that. So like I said, some of the discussion that we're having today is not sexy, but it is absolutely information I think that people need to hear. And sometimes, telling people what they need to hear versus what they want to hear is hard to do, because it's not the thing that gets all the clicks and it's not the thing that gets all the views, but it is the thing that makes you money in the long term. So I'm a firm believer in that. But yeah, let's take a look at what your thoughts are on Bitcoin and Ethereum, and then I think there's a few people in the chat who want to ask maybe your opinion on a few different charts for some of the coins that they have. But what are you viewing here? I guess how do you view maybe the upcoming quarter and the upcoming year? For me, 2021 looks bullish as hell. But I kind of wanted to hear your thoughts on this too.
Yeah, I think, of course, we're in a bullish market cycle. You've got stimulus checks and stimulus payments going on continually. That money supply being printed across every country. The upward trend and dominant trend is to the upside. So, a move to 65 to 75,000 wouldn't surprise me in BTC. Ethereum, 2,500 to 3,500, wouldn't surprise me. But also, you got to take notice of when the trend is cooling off. We might have a plateau, a shakeout, and that's going to be completely normal. So when it goes red and it doesn't move to the upside like it has every single week here for the past few weeks, you've just got to understand the bigger picture of what Bitcoin and Ethereum are looking to solve, and that is, providing the power back to the user base and allowing different companies and decentralized applications to be built. There's just so much positive and upward sentiment that's going on here with crypto. We're still in the third, fourth inning of this, as an adoption, and retail to me is just starting to get involved over the past 2 weeks to a month. I mean, that's hardly any time. So once retail comes full-fledged in, and then you've got that FOMO set in, that's when it might be time to step back a little bit. When everybody's on one side of something, it's time to maybe take a little bit less biased view of things, and take a 10 to 25% profit depending on what your position size is in these ecosystems. So I think, like you're saying, the upward growth for the rest of the year seems viable, and like I said, I'll close it with 65 to 75K BTC. Seems like something that'll happen here in 2021.
Do you see any, I guess, maybe potential points in this cycle that we might get overheated and have an extended pullback? Because we've been going pretty much, not straight up, but right, the January correction that we had from 42,000 to 28,000 was, probably the biggest correction we've had since late September, early October. And it was a decent pullback, about 30%, which compared to the last bull market is pretty standard. But it only took about 2 weeks to complete, and then another week to kind of start responding back to the upside on that. So do you see any point in the upcoming prices where if Bitcoin goes to a certain level that maybe we'll be a little overheated if we go there too fast? Or do you think if we continue to go up in a parabolic sense that not that that's not sustainable, but that that is still possible, that we continue this uptrend in this manner?
Yeah, we're gonna continue this uptrend, I believe, for certain. However, we're gonna have those pullbacks and uptrends, and what you're gonna see is the smart money buy it up. It's just we just go back to probably saying the same thing over and over, but human psychology, when that thing moves down and hits the 20 period or the 50-day moving average, it mentally is hard to pull that trigger to the buy side. But you're going to have the institutions come in and buy it up. They are waiting for these dips, and or the ones that have plenty of free cash flow are buying every 1% drawdown, 3% drawdown. So they'll slowly accumulate. I mean, I was reading the other day about how MicroStrategy accumulated their first huge purchase, and what they did is they traded over a number of days, and they executed, I think it was 15,000 different trades of 0.1 Bitcoin over a certain period of time, and that's how they got their first buy. And their average entry, I think, was 16,000. So these companies have the high frequency trading. They have the mathematical models to outsmart and outprice us. So what you have to do is, when you see that 20% drawdown, 30% drawdown, you have to know that historically buying into that has provided returns over time. It's just that over the first 1 week to 4 weeks, it might not work out for you. But if if you look at things from the macro point of view and you zoom out over time, over a 10-year track record, and that's a long period of time, this has provided upside momentum and volatility, and that's the prevailing trend over a weekly and monthly chart.
And kind of noticing, like the stock market, just as an example, kind of going into your point about, bigger money players and larger companies having bots and different things that do auto trading for them, right? In the stock market or the traditional markets, that's obviously with low latency trading, that whole technology boost that market has seen from let's say the mid 90s through the early 2010s, right? That shift into basically, if you're not a computer, it's going to be very hard to trade this market unless you're looking at it for the long term. For crypto, have you noticed like any specific change in price action over the years that you've been in crypto, maybe due to more technology being involved in the market rather than humans trading it? Or have you not really noticed any difference with that as we've gone from like 2014 till now?
There's a small difference. I mean, the amount of choices out there has grown tremendously. So the amount of tokens and coins we can buy has grown. But I think the competition's heating up, and when the competition heats up, the easier money starts to dwindle down. So I think it's a harder market to trade. I think that is only going to become more fierce as big firms and people around the world adapt to it. Even if it's individuals, you've got to understand that cliche of there's always someone smarter out there than me. And
Yep.
when you understand that humility of trading and investing, that's the first and foremost thing to grasp, that the competition is there and it's only going to get more heated. So what you've got to do is practice those basic, simple principles that we talked about during this show update. And I think doing that, will be fruitful for the average Joe. It's just, can they do it? And I guess time will tell.
Perfect. Yeah, I appreciate that. That's a good outlook on it as well. And going back to what we're talking about with Bitcoin's price trajectory and the current bull market, mentioning that retail trading basically just got here, and the smart money has been buying for quite a long time. We hear about now we hear about news about Harvard and Yale having bought Bitcoin since 2019. And a lot of corporations, like when Tesla comes out and says, hey, we bought $1.5 billion of Bitcoin, it wasn't like the day that they bought it, obviously, right? They accumulated it over a period of time. But now that the retail is here, do you think we're in like a 4-year cycle where we're going to have a top basically at the end of the year, pretty predictable, and rinse and repeat? We do that for the next bull market? Or do you think there is a chance of that lengthening cycle idea that's kind of more out there in this market than what we had in 2017?
Yeah, I think 2017 is the comparison just doesn't make sense. There's so many differences, and those differences include that retail drove 2017, 2020, and 2021 is being driven by institutions. That's first and foremost. In 2017, you had Bitcoin and Ethereum in large quantities being sent to exchanges. In today's market cycle, you have record number of outflow of BTC and ETH from exchanges. So supply is far less. You've got in Bitcoin, you've got the halving that happened. So you've now got a 50% decrease in the amount of inflation that's come out through the mining of Bitcoin. I mean, there's just so many different differences. The amount of ETFs and investment trusts that are out there in Canada, in the United States, in Europe. So these on-ramps into custodians like GBTC, where they host it, they've grown 10x since then. So it's a completely different market cycle, and comparing it from the numeric point of view doesn't make sense. But the amount of the mistakes that people made in 2017, they'll make that in this 2021 market cycle, 2022 market cycle, whenever it expires. So that's why we go back to preaching those simple tenets of being disciplined and not overexposing, and having BTC as the dominant holding, and ETH as a position, and then maybe an altcoin or 2 or 3 in that space makes sense.
Gotcha. No, I agree with that. And then how about for Ethereum? How do you see I guess Ethereum being different in this bull market compared to the last one. I think, Ethereum was leading the market, or at least holding up a lot better compared to Bitcoin at the end of January, early February. But then for a while here, Bitcoin's basically taken back the reins and started to, come back a little bit stronger here. So it's kind of this push pull with Ethereum and Bitcoin right now, which is kind of interesting. But how do you view Ethereum at the current moment?
Yeah, I mean, I think Ethereum still offers good risk to reward. It went from 20,000 sats to 46,000 sats down to 35,000 sats, and it's making a little bit of a move to the upside here. But we're looking at it now over a quarter or two that it's outperformed BTC. And do you look at it on that weekly chart? It's still, not even close to its all-time high versus BTC. And can it reach there again? It possibly could. But right now, it's kind of the ETH BTC charts is in a range, and ETH really needs to break above 2,000 to regain some of that upward momentum it had here over the past quarter. Now, when you're looking at the ETH USD chart, it's making new all-time highs, like we talked about during this year, and I think it continues to do so as investors see the value of the lower market cap, and it can 2x, 3x easier than Bitcoin can, because Bitcoin's now, over a $700 billion market cap. And those are some of the, just the ideas and fundamentals that I think, just without looking at all the exact numbers, I'm kind of just giving you estimates here.
Gotcha.
So take everybody with a grain of salt. But, that's what I really see with the space. I think we're doing great, and DeFi is growing, and the amount of positive things that companies are doing. I think you've got less scam coins that are happening, like 17. So I think that's positive for the space. You've got the number of illicit uses for Bitcoin decreasing year over year, which is positive for the space, because people still have that mindset of it being a laundered currency, or an illicit use case. But in reality, the USD is far more used for illegal purposes, and
Yep.
Bitcoin being pseudo-anonymous just doesn't make sense to use it that way, and it's really not used that way, and that's what I think. The naiveness of the general public will come to that awareness when they see the numbers, and the numbers speak for themselves. It's decreased year over year, whether that's ransomware, whether that's attacks, or those negative use cases.
Yeah, and I guess the mainstream media helps to push that narrative, because generally they don't want to adopt Bitcoin if they don't have to. They want to keep the status quo. Got Yahoos like Janet Yellen out there coming and saying, "Hey, Bitcoin is used for illicit purposes. Be scared of it. It's coming for you and your children." Right? It's like, no, it's one of the best forms of money that there is, one of the hardest forms of money. And definitely, has a place that it's forcing itself upon the rest of the world right now, which to me is amazing. So, watching how Wall Street is basically starting to eat their own words and starting to have to shift their narrative on Bitcoin and cryptocurrency in general is fun to watch during this bull market, because once you see guys like Michael Saylor, Elon Musk, and people like Cathie Wood as well, some of the smartest people in the room or in the world, getting into this seriously and understanding what is actually happening here, is starting to shift the narrative. And to me, that's awesome. But we do have some super chats I do want to mention, but looks like you're thinking of something with Grayscale here. So kind of want to see what you're thinking.
Stock market open here in the US. So just want to see how things were performing.
Right.
And like we talked about ETH, opening up at 21, and you can see it here moving up above 21. As 7:30 hit, I looked at BTC here on the left, and I'm just looking at the hourly. In the past 3 hours, you've got bullish wick, so buying happening as it approached. It's 50-hour moving average. Sometimes I'll look at the hourly just because I'm sitting here, reading or talking to people just to see where current price action is. Not like I make decisions based on the hourly. But when the U.S. stock market opened, two minutes ago, you've got GBTC. Pre-market was down 2%. Now it's just almost flat, down 1/3%. ETH, making a move to the upside, 4% after it kind of being a turtle lately. So like I said, just positive stuff going on. I just wanted to see how the market reacted here. But it is always
And
important to watch the first 30 minutes of traditionals.
definitely. And can you pull up the on the left side, pull up an Ethereum to USD chart? And I wanna see some things with that compared to ETH.
Okay, yeah, I'll do it here. I'll do ETH on the left, and ETH USD will be on the right, and we'll just go daily.
And one quick question: are you okay on time? I just want to make sure that we're doing the best usage of your time here.
Okay, I've got a few more minutes here.
Okay, perfect. Yeah, I could ask you questions all day. This is great. So
let's rock and roll here on this comparison. What are you thinking?
yeah, so I was just kind of wondering, when you look at the two, because obviously they're two different instruments in terms of like how people are using them, what people are using them for, how Grayscale is evaluating the price of their trust. When you look at the two, and also with Bitcoin to the GBTC, have you noticed anything in terms of how they influence each other or how they maybe diverge from each other? I'm just kind of curious to hear your thoughts on that, if you've tried to look at that before or not.
Sure. So GBTC is going to be different than ETHE, just due to the number of the dollar amount that's under management. I think that's important.
Yep.
But also ETH being just a much newer instrument, it was all over the place. I mean, it was impriced improperly over time. It was super volatile. They had a reverse split, so that happens. Then you've got the fees. There's a lot that goes into it. But so the way I looked at it was from the longer point of view, and I was like, I'm not going to get shaken out of the long-term volatility if I believe ETH's going here from 1,000 to 2,000, whether ETH is priced properly or not, it will eventually turn to the upside due to the fact that it does track Ethereum, as best as possible in the traditional world. So, like this should make a move to 26. Its resistance now is 24.98. I think we'll come up and test that. Probably fail once or twice. But once again, 21 to 25. That's a nice, almost 20% gain just doing the math in my head. And as ETH, makes an all-time high here, the resistance is 19.29. We're $11 below that, $10 below that right now. You'll see ETH react in that sense too. And then let's look at where the moving averages are. You've got the 20-day now upward sloping, 20, 50. The 100-day just crossed through the 200-day. So now you've got perfect alignment here with price above all of them. To me, that just suggests more upside potential. Could I be wrong? Heck yeah. I mean, this could reverse and come back down and retest that 20-day at 1770. But then you'll have to have ETH come back and test its 50-day probably at almost 1,400 to 1,600 in that range, between the 20 and the 50. So you've kind of got to just like understand what the chances are of things happening, because nothing's ever a certain in trading.
Yep.
But I do see more upside than downside in this chart.
Okay, gotcha. And how about with GBTC compared to Bitcoin? Obviously, those two have been around a lot longer with each other, so there's going to be a little bit more confluence with, when they move together.
One thing I think is in years past or in months past, that BTC always controlled the GBTC chart, and that's why you had such premium for people to get involved in. Premium was upwards, from just recent memory, upwards to 75%. It's been even higher than that in months and years past. But now GBTC has an influence on BTC, in my opinion, and the reason is they're buying and accumulating more Bitcoin than is produced on a daily and weekly basis. And just simple economics tells you, when demand outstrips supply, what's going to happen? You're going to have upward momentum. Are you going to have those pullbacks? And yeah, you are, because there are whales out there. There are external forces and factors that influence price action. But what's the overall prevailing trend? If you zoom out and look at things from hourly or 4-hour basis, it's that upside move, and that's happening today. Look, I mean, BTC moved sideways for a couple hours last night, and yesterday afternoon my time, and then it's continuing to get bought up here, and it's really remarkable. I've never really seen anything like this in my life, and I think we're really fortunate and lucky to be a part of this. And you know, owning GBTC has provided fruitful. I mean, that move from it's, you know, 10 to 50 from October to today. You know, that's incredible. And volume supported. If you look at the chart here on GBTC, you've got an increase in average volume, which is positive. But the one thing you got to take note is on the above average volume. What are those? Those are green days. That is moves to the upside, and that's, you know, 2x the volume here in the beginning of the year, January 6th. You've got, you know, 1.5 times the volume here, February 8th. Yesterday and the day before, you've got, you know, average volume as it moves to its 52-week high. All-time high. You know, GBTC had a reverse split as well a few years back. So this is just tremendous, and you know, it's an opportunity worth capitalizing on, and that's what I see here.
Gotcha. No, I appreciate that. Yeah, I think it's interesting to kind of compare the two and just kind of also get your take on what you think of those from the long-term point of view. So we got a few super chats, and then we'll begin winding down here a little bit. I want to make sure to answer the people who have taken the time to jump in here with the super chats. Then we can ask a few more questions here before we finish up. But Francisco with the €5 super chat says, random question. If you had some extra money until the beginning of the course on March 5th, would you still get Kusama at $224 or go for other coins or projects? Thanks, loads. What's your thoughts on the chart of Kusama?
Let's pull it up here, see how it looks.
It's making some good moves, I tell you that.
You had a trend. You had the long come through at the beginning of the year, you know, second week of January. So it moves from let's see here. That's about a, you know, 130% gain from then until today, even a little bit more, you know, 125, 140% in that range, just depending on where you're looking. You know, you've got this nice big bar up to the upside. You've got, you know, lower highs in play. You've got the upward slope 20 and 50 and 200. I mean, it looks good. Let's look at it on the daily just to give it a real true sense. So you've got market, you know, it's a relatively new coin. You had this accumulation range down in here. You know, this does look positive. It's got to take out that 4,800 sat level to make a move up into the 55 level. One thing to take note is after this move to the upside, you've got decrease in volume here on these two bars. So I'm not sure I would go all in on something like this. And I also don't know enough about this KSM coin. So it's hard for me to recommend something I'm not super familiar with. But, you know, the chart looks positive. You got an upper slope in 20, price above the 20, upward slope in 50, volume to the upside. You know, this could make a move, like I said, to the 55 level.
Perfect. Yeah, and this is, I mean, like you said, you know, I don't know if you'd go all in on something like this, right? Like for us, we to be kosher here on YouTube, we say never go full simple jack. I don't know if you've seen the movie Tropic Thunder, but you know, just keep things in perspective, you know, and don't go too crazy on stuff is essentially the message there.
You can look at the 4 hour real quick. I mean, just holding 42.14 is going to be the key for this. So maybe, you know, a limit at that, and then you give it 3 to 6%, depending on what your max pain is.
Yep. And I mean, this one we've been watching for a while here since July of last year. It is kind of like what I call my dark horse for this bull market. I do think Kusama and the Polkadot ecosystem in general will do extremely well in this bull market. So it is nice to see it outpacing Bitcoin, and then on the chart here having some nice buy signals. We got our Drizzle in the house with the $5 super chat. Just says, thanks for the crypto knowledge. Appreciate you, man. Thank you very much for jumping in. We got Karn here with the $5 super chat. Says, going forward, what's the play if the government tries to punish the use of other crypto over WE?
Whatever.
Oh, okay, whatever they set up. So we're trying to hold forever. So this is where it gets to the Nirel Rabini argument, which is central bank digital currencies are coming and they're going to crush Bitcoin. It's like, to me, it's absolutely absurd, but I'm really interested to hear what you have to say about that.
Yeah, I mean, so we've seen this happen with China, Russia, now India. You know, these emerging markets, the BRIC. You know, they've attempted to stymie and control their people with these, you know, these threats, so to speak. I mean, I can't recommend whether you're going to go against your government or not, but I do know that Bitcoin doesn't care what your government or my government says.
Yep.
I want to follow the rules. I know that, but I know that Bitcoin is going to have its heartbeat no matter what, whether they like it, we like it, you like it or not, and that's something to take note of. Just understanding that aspect of Bitcoin, that it would take a catastrophic, electromagnetic pulse to take down the entire Bitcoin ecosystem. So you'd have to have the entire internet go down for Bitcoin to go down. And I just don't see that happening. I'm not one of those conspiracy theorists.
Yep, 100% agree on that. And we got another super chat here with Mr. Gray saying, "Hi, I have Coinbase where I buy my crypto. They sent me a notice letting me know that I can take a stake on Ethereum with their app. Should I do it?" Oh yeah, I read about this, right? Coinbase is going to allow staking on Ethereum. Basically, they're going to stake in the background and let anybody who has less than 32 ETH get some sort of rewards for there. I don't know the details on that. Do you know anything else about that?
I know a little bit about it. So I researched staking for myself earlier in the year, and I decided to go against it. I just didn't want to have my 32 ETH locked up for
Oh hell yeah, indefinitely, right?
Your computer that you stake on, like it can't go down, and if it goes down, there's like a penalty. And I'm not technical enough. My programming skills are extremely limited, and my CLI skills are extremely limited. So staking ETH was not something for me. But I know with Coinbase, I think they're promising to give you maybe, I don't know, the 6 to 9%. However, they're taking 25% of that profit as well. Don't forget.
Yep.
The one thing to also note is it locking your ETH up until ETH 2.0 comes out? I would think it is. So are you willing to hold, ETH in that fashion? And if you are, and you're willing to give Coinbase their cut, it could give you more of a yield than you get in the bank. But if we do go through a bear market and your ETH's locked up, that's one thing to take note of. You can't touch it.
Yeah, exactly. I mean, staking Ethereum via the actual smart contract right now, unless you're just like, holding that Ethereum for like the entire decade, because like you said, like the Ethereum 2.0 right contract is allowing this to be staked indefinitely until they figure out when that's going to be able to be unstaked, because right now they have no date for that specifically. So yeah, that's a gamble in of itself. I'm not sure if Coinbase is allowing you to stake it temporarily and then gets that APY like on a short-term basis or long-term basis. So I'd have to take a look more into that. But Celsius, as an example, if you do want to get some yield, without staking Ethereum, technically that would be the one place. But again, not your keys, not your coins. So just be aware of that, and don't put all of it on there. We got Christy with the $5 super chat saying thank you and happy Thursday. Thank you as well. So yeah, I really appreciate the time here. We've gone about an hour and 40 minutes, so a little bit longer than I expected, but really enjoyable conversation and really interesting. In terms of the market or the conversation that we've had today, Mark, is there anything else that you wanted to mention or think that people should be focusing on?
I think just, re-listen to this if you need to take notes, and just practice those tenements we talked about. And there's really nothing else to touch on. I think we covered a lot here, and don't want to hit people with too much of a information bomb to where it gets confusing. And I just think you're witnessing and you're part of something that's generationally unfolding.
Appreciate that. Perfect. Yeah, keep it simple, right? So really appreciate that. Just as a reminder for everybody, we do have the crypto mindset course coming up here on March 5th. So make sure if you are new to crypto, or if you've been in crypto a while and you want to up your skills and find different ways to make money during this bull market, be sure to come over here to cryptomindsetcourse.com. Put in your best email address here. Then you'll be put on the list. Like I said earlier, this will only be available from March 5th until March 9th for purchase. The course itself will start on the 12th until the 23rd with 20 webinars given during that period of time. So lots of information. If you use about 20% of this information, you will do better in this market than the majority of people. But so you don't need to take on all the information from the course, but taking on the majority of the information from the course and applying it and making sure you're following best practices, and then also finding different tips in the market that you can, not tips that like blindly follow, but use your own use the gray matter between your brain that God or between your two ears that God gave you, and really understand this market and just accelerate your learning. If you want to do that, come over here to the cryptomindsetcourse.com, put in your best email, and you will be notified then from March 5th to March 9th, once the course is live, that you can purchase that. So just wanted to mention that. If you can't shill yourself, what can you shill, right? So
you know your stuff, so I'll definitely be taking part in that myself.
Thank you, man. Yeah, would love to have you in there, and it'd be great to get your 2 cents on things that are happening in the market. I think, there's obviously, we're two different traders, so there's a bit of a difference in like some of the things that we do. But I mean, we're two different people as well. So, but you've made a lot of money in this market. I've learned a lot from you during this market as well. So I really appreciate that you took the time to come on our show today, Mark. If anybody wants to visit and learn more from what's happening in Mark's sphere, go over to bitcoinsmartmoney.com. Also visit him on Twitter, BTC Smart Money on Twitter. So we'll be jumping off on stream here. Hold on just a second, Mark. But thanks for everybody who jumped in the chat today. Have a good one, guys. Peace. Live long and prosper. Catch you all again soon.